The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
So one of the more interesting new trends in the digital currency world are central bank digital currencies. And now Europe is grappling with issues that many governments are grappling with all over the world, which is how do you create a central bank digital currency that also preserves privacy? So joining us to discuss some prospects for the digital euro is Marina Niforos, affiliate professor at HEC Paris. Welcome, Marina.
Thank you very much. Good afternoon from Paris.
Good afternoon. So let's just start with the biggest question here, which is what is the argument for a digital euro? Why do we even need a digital euro, right? What problem would it solve? What would it do? Why do people want it?
Well, the digital euro is a project that has been instigated, I would say, by very rapid changes that are taken around in the global sort of payments ecosystem. So it's not a specific project motivated only by European impetus. So we have seen a flurry of different jurisdictions and different sovereigns working on digital currencies, some as early as 2017, and some have made significant progress, Bank of Canada, China, etc. In terms of what it tends to serve a multitude of, I would say, policy goals that sometimes, unfortunately, can be competing goals and therefore difficult to reconcile. And hence, I would say the difficulty also in the design so that it can serve all those multiple goals, because it intends to provide financial inclusion, facilitate access to payments, ensure a greater efficiency of those payment systems, as well as resilience in times of crisis and shocks, acting as a backup system. But also, I would say, in its design, comply with existing legislation and the intent of minimizing illicit use of money, money laundering, or use for terrorism financing, etc. Maintain control over monetary sovereignty, and also minimize any ill-intended effects on oligopolistic effects from having perhaps some large digital platforms and players dominating the landscape. So while the digital euro is intended to serve, let's say, the efficiency, resilience, facility of payments, and greater access for perhaps disadvantaged segments of the population, it has to also counteract with these other policy goals. And all this in a very competitive landscape where other sovereigns are running to also develop their own digital currencies, as well as private sector actors like the DM, formerly Libra, private currencies that are also trying to have a strong presence in the space.
I guess the question is it possible to have a privacy protecting CBDC? There are a few proposals out there. We had someone on the show recently from Congress talking about basically creating just a digital version of cash. So it would have the same sort of anonymity as cash. And then we also had a guest from the UK who came on and said, talked about incorporating zero knowledge proofs into the CBDC process. So is there a way to actually, have a CBDC, but also protect privacy?
Well, I wish there were an easy answer to that, because there are different theories and different options, both on the back end infrastructure and the technological options that you can use to, let's say, have this privacy by design that many policy making authorities in the privacy protection space are advocating for, including the European Data Protection Board. So let me just go back to set this in context. So in the European space, the results of the public consultation that the ECB published back almost a year now in April put privacy as one of the biggest concerns for citizens and sort of other stakeholders. So privacy was largely one of the top concerns for people at 43%. Very much behind was security at, I think, around 18%. So privacy is a very big issue for European citizens. Europe has also been a pioneer in sort of the standard setting with the GDPR and the protection of privacy. which now has purportedly become almost a global standard. So this is an issue that looms largely in the public's and also in sort of the safeguard, the watchdogs, let's say, of privacy right bodies around Europe. Now, can we design a digital Europe that satisfies both compliance with existing legislation that I mentioned before, so AML, know your customer, and to counter out the effects of illicit use of money, while at the same time safeguarding the rights of citizens and not sort of cascading the level of concentration of data and potential misuses of that data to such a granular level that we have a violation of those rights. The ECB, in a letter that they actually published, an open letter to Fabio Panetta, the ECB head of the task force for CBDCs, clearly stated that there should be safeguards built a priori in the design. And they've actually put forth some recommendations, although they have encouraged that a lot more consultation should take place between the different stakeholders and the designers of the digital euro in terms of at what level should we set the thresholds where disclosure of the data would be mandatory in order to fulfill the compliance purposes for AML and KYC. For example, in terms for cash in France, that limit is 1,000 euros. Everything below, there's no obligation to disclose the identity of the person doing the transaction. So they're using that as a proxy to say, we could have certain thresholds below which it wouldn't really make sense, either from a privacy protection point of view, but also from an efficiency point of view in terms of accumulating that kind of data. So that could be an avenue about building in safeguards.
Do you think there's
you talk about these thresholds, but of course this doesn't happen in a vacuum. Europe's attitudes are surprisingly, I don't want to say malleable, but they've certainly changed over the past month, of course, because of the war in Ukraine. We're seeing, for instance, voters say vocally things that we were surprised they were going to say to begin with, such as their willingness to not buy Russian oil and gas, etc. Things that in general we're quite surprised European voters are willing to accept. Do you think that their attitude towards a digital euro and towards privacy might be different if they're told, hey, listen, this is to safeguard against, let's say, oligarchs from using a digital euro to money launder? Do you think that this might change their willingness and make them more open to having a less private euro?
I think it's very difficult to say that people will be willing to give up privacy. If I understand your question, if there was a bigger sort of national threat or sovereign risk in question. It's true that the Ukraine crisis has sort of rearranged, I would say, the priorities for European citizens. But I would say it's also reoriented their concerns more towards security. And there will be a trade-off, I think that's what I'm hearing from you, in terms of putting more of the weight and the priority on ensuring security and sovereignty of data, rather than perhaps individual privacy of that data. But that being said, I think a lot of people would be very concerned if they thought that their data were not, at least have some minimum safeguards that are, in fact, they're already enshrined in the EU Charter of Fundamental Rights, and they're in existing legislation. So this is nothing, it's not going to be anything new. It's just staying within the limits of the current legislation.
Do you think there's a correlation between decentralization and data privacy, or is there an inherent conflict in there because any digital ledger will necessarily be tracking and storing data?
Well, actually, blockchain enthusiasts would argue that a distributed ledger solution might actually be better for having this kind of privacy by design, because at the same time you could have traceability and therefore be able to follow through the custody of data. But at the same time, it could ensure, and this is in principle yet, that the information and the disclosure of that information still remains protected by a cryptographic mechanism and could be disclosed by need basis only to the particular authorities that would be concerned, and only those who have the mandate to request that kind of information. So in that sense, blockchain could be a solution more than an inhibitor.
Yeah, we find that private firms are able to trace that. For instance, if you look at what happened with the hack of Bitfinex and the ultimate catching of two people who may have been allegedly involved in that money laundering, and many other cases where they've been able to track down, for instance, theft, et cetera. And these are private firms in a lot of cases that are able to do that. I mean, how much is that really just a government allowing for privacy, as opposed to just the fact that it's not as private as people think?
Well, the more centralized the ledger, the more vulnerable it is as a single point of attack to whoever would like to tamper and hack. So I would say, one of the purported endemic advantages of distributed ledger solutions is that because the network is so distributed, in principle, it provides a lot more security against breaches. Not that they have not happened, they have happened. But the fact that you have a major player, including a government, actor who maintains all that mass of data in a centralized ledger is not necessarily a better safeguard for security in protecting that data.